Hi everyone, welcome to Single Value. So today we look at Squarespace. Squarespace is coming onto the market and it is another interesting company that you probably would have heard of because a lot of YouTubers usually refer it as a company to use for your web hosting, and that they use it as affiliate marketing. Well, I've personally seen it a lot in a lot of YouTube videos that I've seen, so I think if I've seen it a lot, you've probably seen it a lot. So definitely worth looking into in a sense, though I immediately off the bat, when I looked at the numbers, they didn't make that much sense to be investing into it. And also it's a direct listing, so you know that things are just going to get sold down, like kind of like the Coinbase listing where things came in and it got sold down so horribly bad that Coinbase is just recovering now, so it's at that $300 zone. And I think now is the chance you get to see where, hey, Coinbase got sold down and you can actually buy it now at a cheaper pricing than when it came onto the market. And I think the same thing about Squarespace, especially if it's valued at $10 billion. $10 billion is an extremely large amount, especially when you consider, hey, revenues were $621 million. Like $621 million is okay, but to justify 10 billion, you have to get possibly around 50 to 100% growth rates or more, right? Because we're trying to justify, about 15x your revenues, whereas the current revenues are showing around 28%. So immediately when I look at something like this, having looked at a lot of growth companies, it kind of just doesn't fit well with my appetite for a company that I would probably want to be growing a lot more at that price range, at those multiples. It's not an extremely high multiple, mind you, but it is in a space where they don't have a particularly strong moat. So I kind of just feel like, oh, actually, it's not the most ideal company to invest in, particularly when they're at 621 million revenue and they've only got about 28% growth. So immediately when you look at these numbers, you kind of already interpret quite a few things already that you don't actually need to dive in too much deeper. Though, it does sometimes pay a bit of, sense to just look into it a bit further. So as we, jump into these things, you kind of know what Squarespace does. They get into that online space. And they've just been doing a really, really good job, particularly, especially with engaging a lot of influencers to really market their product. But of course, at the end of the day, it comes down to the finances, and we're watching the revenues go. In 2018, it went from $389 million to $484 million, which is decent growth. And then it did even better, going to 484 to 621, which is really, really good. But even then, so the consistency of the company is actually very, very nice. And when we look at these numbers, but the problem you would probably have is, hey, the growth isn't that fast, but the margins are amazing. And look at the margins, $70 million for cost of revenue when they generate 389, and $81 million when they generate 484 million in revenues, and 98 million for cost of revenue for 2020 when they generated 621 million in revenue. So when we look at that, the margins are quite nice, and they do translate to a profitable company. So in that sense, it's always nice to have a profitable company. The profitable company part kind of just aids it in its valuation. A company that's profitable is much better than one that's not. But at a 10 billion valuation, I cannot justify that. I would say this company is worth 4, maybe 5 billion in my books. But of course, the market can always decide what the value is. So for me personally, if I couldn't buy this company at that $4 to $5 billion mark, it doesn't make sense to buy this type of company. So I just look at it on a quick basis because it's coming onto the market on the 19th of May, and I thought maybe someone might have some interest in this company, so I might as well talk about it. And for me, I just have that interest to just jump into these companies, look at them, and just decide if they're actually good or not good. And maybe it's a lesson for you to, look how I look at companies. Like, this would be immediately I can look at it and go, it doesn't really stand out to me as a company worth investing in at this kind of price tag. At the end of the day, it does come to the valuation. A company could be splendid, but if the valuation's not right, then it's just going to be difficult at the end of the day. And this company, I don't feel like it has an extremely strong motion what it does. So yeah, it just again, investing is one of those things, as Warren Buffett tells you, you don't actually have to do. Like, as he says with his analogy of a baseball player having to swing at a ball. Well, when you're a stock investor, you actually can choose when you actually buy a stock. If you're a baseball player, you can choose when you swing at the ball, assuming there's no strikes. So if we look at that sense of things, like you buy when it makes a lot of sense. And currently with Squarespace, it doesn't make a lot of sense. So for me, it's a pass on my situation when I look at this. But of course, there's always people wanting to buy in these companies. Like 10 billion valuation can't happen if there's no buyers. And this 10 billion was their last valuation. So obviously, some numbers were there to give it their valuation in terms of it being valued at 10 billion. I don't know who's giving this 10 billion in valuation, particularly with 28% growth. But hey, that's kind of the market sometimes. I'll be interested to see how much the market actually values this company at. But for me personally, it doesn't look like a $10 billion company, maybe 4 to 5. But overall, I mean, the stats aren't bad for what it's doing. Like, decent sized revenues, very consistent and nice growth. Like, the growth is increasing here in 2020. So if they have a case for 2021 being even better, or being more consistent as well and better, then hey, that could be great as well, because this company is profitable. So now it can really focus towards all the resources towards growing this company even more. But I feel like if they were growing the company, they would, like, by a lot, they'd probably be doing that anyway. They did make 58 million in net income for 2019. So if we consider that, like the net profits actually decreased in 2020. And you can see with the research and development costs, that has gone up by quite a bit, from $107 million to $167 million. So you can sometimes break down these numbers and go, where are they spending this money? And also they're spending it in the market and sales. And that's gone from 184 million to 260 million. So that's a nice thing about growing your revenues, to a level at that, in the hundreds of millions, is that kind of just gives you a lot of room to spend on marketing, and sales and research and development. And that's what makes the company self-sustainable, and also makes it a much more compelling company going forward into the future. But at the end of the day, it comes down to the amount of revenue they can generate, and that comes down to the growth. And the growth is decent, but for me, it's not enough to justify the valuation it is at now. And there's a lot of companies right now, there's so many growth companies that are being sold down way low, that there is not as much of a compelling argument to invest in this one, as opposed to the ones that are already listed and selling at a much cheaper valuation than this. Let me know what your thoughts are. Does this company interest you? What interests you? And do you see this valuation as being reasonable? Or if not, or if you've got any questions, just post below. Until then, good luck investing, everyone.